So there's been a lot of discussion about what a Trump administration policy will look like around energy and infrastructure, the effect on those sectors, and for our purposes, the effect of deal making in those sectors. So let's start with the energy sector in the U.S. It's useful to break the sector down into renewables and other power generation, and then oil and gas. So the renewable side, it's again also useful to break it down between climate type policy or climate change policy, and then looking at what transactors would be focused on, what would be the effect, for example, on renewable energy transactions going forward. So with respect to climate policy, there may be an effect of the administration. Trump has been vocal about his opposition of the Paris Accord, which was an aspirational type document. So it was a matter of whether we would go ahead and meet the what was agreed to be the requirements of the Paris Accord. There may be some changes, and Trump may still continue along his policy of that going forward, but that doesn't necessarily mean that there will be a real effect on renewable energy transactions in the United States, which is the types of transactions that we focus on. So what drives those transactions really are a variety of different factors, not just relating to climate change. So renewable energy is good business, and in particular it's a bipartisan business. So there has been an increase in the number of renewable energy projects, wind farms, solar projects in Republican states. So both Democrats and Republicans recognize the business behind renewable energy, the subsidization of the industry, which has been the production tax credit and the investment tax credit driving both the wind and solar industry, was not really a big focus of the presidential debate going forward. The debate was really focused more around climate change type regulation and not the subsidization of the renewable energy industry. So it's not as if the tax credits received a great deal of focus, and we wouldn't necessarily expect going forward, given that they were already slated to phase out, that there would be significant change in the actual legislation. There could, however, be changes in the way that the credits are administered by the Treasury Department, by the IRS. So switching now to fossil fuels, there was a significant focus in the Trump campaign about expanding and bringing back the coal industry. That doesn't necessarily mean to us that there's going to be a new expansion of coal-fired projects. Gas remains sufficiently inexpensive so that it is a competitive resource. And on a going forward basis, there still would be a concern that even if the Trump administration lightened regulations on coal production, that a future administration could ratchet them back up. So we would expect that the generation mix in the United States between renewable, gas-fired, and a phasing out of coal-fired projects continues to go on that way. So let's move now to the oil and gas sector. And there it's useful to look at the history even before the election cycle came out. There was a glut of supply on the market that was driving down prices, and that was driving down project development here in the United States. It wasn't necessarily thought of as an issue of over-regulation by the Obama administration or the inability to drill in certain areas. It was the production that was coming online from shale resources and from OPEC nations in terms of not curbing their production, notwithstanding the drop in prices. So projects were scrapped for that reason, or for that as a primary reason, rather than necessarily over-regulation. So looking forward, it looks like the Trump administration could tweak policy, and maybe you see some sort of tweaking around on oil and gas in terms of project development, but we still believe that it will be driven largely by macroeconomic forces.